It's time for cash tags, guys. Evelyn, you want to set everything up?
Yeah, so as we just mentioned, we're going to talk Canada Goose today, and they report earnings tomorrow morning, and shares are moving today. They're up more than 5%. So, Landon, even though the weather's kind of warming up, are people still talking about Canada Goose?
Yeah, they are. And what's the important thing is what happened last quarter. So their quarter ended March 31st. And yeah, the stock's already up 5% today, which is a little bit unusual the day before earnings. And what we're seeing is, going into last quarter, we saw a very big year-over-year increase, but we were bearish on the stock because the stock had ran so much. And so what we're seeing now is that follow-through is likely not there. So the year-over-year was big move for the third quarter, fiscal quarter, and it's up a little bit year-over-year, but it wasn't nearly as big as the move from the previous year-over-year, if that makes sense. And so what we're a little bit bearish on this because of the fact that it is flat year-over-year, whereas based on last quarter, you would expect it to be a little bit higher than that, plus getting an extra 5% today. So that adds to our bearish slant.
Yeah, Landon, you got it up 6% today. You've got a move, a plus or minus move by the option market, pricing in over a 10% move on this particular name, and it's got a small float, which I mentioned earlier. Do you think, and because the stock's been trading sideways all year, basically chopping between a couple levels, do you look at this name and say a short squeeze could come in at any point on this because it's one of those brand names that hasn't participated to the upside that we typically see when their sales are still growing exponentially year over year, so they're still a wanted commodity?
Yeah, they're definitely growing. They've been booming ever since Kate Upton was on Sports Illustrated cover. I think that was back in 2013. I mean, you could see it on that chart there. It's a big increase in purchase intent. But what we're seeing is that growth has been slowing. And so it's gone from sort of exponential to more linear now. And I think that for a company with a stock price that's had the run that Canada Goose has had, you want to see that continued exponential growth. And so any kind of slowdown, even if you're still gaining year over year, the slowdown is what's concerning. That's why we had the bearish call last quarter. It goes down 15% on a beat and raise, which we, was exactly in line with what we thought. Just the price was just too high. So going into this earnings report, we were, again, this morning, I would said we were slightly bearish, but if you're going to give us an additional 5 or 6% today, we're going to get a little bit more stronger on that bearish call, based mostly on the price being too high. We don't think sales are a big slump, but year over year, you would have expected more given that big last quarter.
Landon, when I'm looking at your growth in terms of purchase intent mentions, it's hard for me to think of that going to be, for that to continue to be exponential when they're really just, winter coats, and they're so, the product is such a high quality product. They claim it's going to last for a lifetime. How many winter coats can you sell after, one, it's already segmented out to only a certain part of the world that actually needs a winter coat, but you don't need 5 of these products. So to me is once people already accumulate them, isn't that going to hurt their growth prospects?
Absolutely. If you're talking about a $1,000 coat, and like you said, you have a limited market as far as geographically where people need these kind of coats. And if they do last as long as they're supposed to, you don't need to. And if they don't last as long as they're supposed to, then people aren't going to buy them. So it's a little bit of a conundrum for them. I think what they need to do is get into different products where they can sell in the spring and summer, not just rely on 2 quarters per year.
I think this sentiment is exactly what our first Twitter user had in mind when he tweeted this right around their IPO date on March of 2017. From Brian Morey, who says, if they're able to put a winter jacket up for IPO, I have a sock drawer and a jar of pennies to list on the exchange as well. Of course, they first started trading about $18, and granted this year they saw highs of 70. Now they're back down to 50. But I feel like maybe this person is kind of eating their words.
Well, no, I mean, it's obviously worked out for them. They're increasing sales. They're growing internationally. And I think that's probably putting a little bit of a stump into the stock recently, is that international expansion. They had those issues with the CEO or the executive that was held in Canada, and then they're expanding over in China. Maybe they're not expanding as much, but I'd just be wary of this one if you're going to trade it, just because I think the expectations are for a big move, and we could see it either up or down.
Landon, I want to get your take on this real quick, because when I think about a company that the brand is kind of the single product that they have, I look at those, unless they're able to, as you say, kind of expand into other products, they're really in kind of for a world of hurt. Snapchat, for example, GoPro, for example, have had trouble to rotate off of their core product, and although they had a lot of hype once they came to market, you saw that those stocks kind of eased their way down. But then you look at something like Roku. Roku was that solo hardware device, and they shifted into like the software, and that's done nothing but good things for the stock's performance. So that's kind of the question I always ask is, what is Goose going to be able to do next?
Yeah, those are tough comparisons. I mean, with GoPro and Snapchat, they got beat. Snapchat beat itself, and then they've got out-technologied by Apple in a lot of ways there. And Roku is winning, of course, and it's just doing a fantastic job. It's very scalable, unlike Coats. Coats are not nearly as scalable as Roku. So with Canada Goose, they've got some cool things coming. Their new stores have cold rooms in them, which is sort of a beer cave, I guess. You can go in there and try on a coat and see how well it keeps you warm. That's pretty cool. But I do think that they need to expand more into different clothing items. Now, one interesting thing is Moncler, their competitor, their purchase intent is doing much better. They have the very same cyclical growth, seasonal growth cycle, and theirs is not slowing. So Goose has been up for 4 or 5 years in a row, and now the growth is slowing. It's almost becoming flat year over year, where Moncler is actually continuing to grow. So we don't think it's an industry-wide thing. We think it's just Goose is maybe not killing it as much as they used to.
Yeah, but remember this, they do have other products. They got a sweater that you can buy that costs about $350. They got a winter hat that you can buy for about $120 or $150. So they do have other products. They just are very expensive.
Which plays perfectly to my next tweet from My S, who says, I really want a Canada Goose jacket, but is it a justifiable expense? And I have to compare this to the fact that I will throw down $1,000 for an Apple iPhone, but I have a harder time doing that for a winter jacket. Like Alex, you were talking about earlier, you really only need one or so, but you don't use it every day like you would your iPhone. And I kind of feel like I should pay rent instead of a $900 jacket.
Yeah, Lynn, I want to get your take on this too. I think I could have tweeted this. This might be something I would have tweeted, but when we compare it to Apple, I think that's actually a good comparison, because Apple, their phones didn't used to last as long as they do now, and we're seeing that that's really affecting their bottom line. Well, if Canada Goose is going to provide this product that's got a lifetime guarantee almost, which I'm not sure if it does or not, but they claim it lasts for a long, long time, that can't be good for the stock, as I've said multiple times. So to tie this back into what you guys are looking at, you're showing slowing growth in terms of purchase intent mentions, but this isn't as a result of the industry as a whole. This is actually Canada Goose specific, on top of a stock that's had quite the run, even though it's slowed down over the last year.
That's right. Yeah, and what's really important is that there are 2 key quarters for this company every year. This is the second of this year. Last quarter was up tremendously year over year, and this quarter is only up a little bit year over year. So I think that could be a disappointment. If the street is expecting the same kind of continuation that we saw last quarter to apply to this quarter, they could be disappointed, especially since you've got plus 5 or 6% today. Just adds to it a little bit. But you summed it up very well, Alex.